Hey, wealth warriors. Are you ready to redefine wealth and master your money mindset? Welcome to Women of Wealth. I'm your Gen X host, Hollywoods Gray.
And I'm your millennial host, Allie Ramo. This episode, we're discussing health sharing, what it is, and how it's different from the traditional health insurance.
Well, let's meet our guest, Ginny Bartlett-Elbert. Ginny, tell us a little bit. Hey, tell us a little bit about yourself and how you got here.
Awesome. Well, thank you so much for having me here today, everybody. It's a pleasure to meet you all. My name is Ginny Bartlett-Elbert. I am a mom of five. I'm an entrepreneur and I'm a published author and a healthcare advocate. And I found myself here today ready to share with you all the differences between traditional insurance and healthcare sharing.
Awesome. So let's start there. What are some of the differences and how do you explain it to people when you are meeting with some of your clients?
Yeah, that's a really great question. And I love that question because healthcare sharing is an opportunity for people to have an alternative to the high cost of health insurance. So, health insurance is based off of a household's income. So, your monthly premium is always based off of the dollars that come into your household. And in traditional healthcare sharing, that's not a thing, right? So, healthcare sharing is based off of the oldest person in the household. And some of the major differences is that we have whole house deductibles with healthcare sharing. And in traditional insurance, there's deductibles per family member. Our max out of pocket and our whole house deductibles are on average 30 to 70% less than what you would pay in a traditional insurance company.
Uh,
So, when you're talking about health sharing, what is the sharing piece? What are we sharing?
We're sharing and paying each other's medical bills. So, healthcare sharing has been around for around 40 years here in the US. Not everybody can participate originally, but about 5 years ago, the law stepped in. Government changed the rules and allowed healthcare sharing to become available to anybody who was interested. So, ethic based companies formulated. And so, what that means is literally you pay your monthly premium and that money goes into your share account and it's pooled together with everybody's monies. And so if an eligible medical bill comes in, we have patented technology different than traditional healthcare sharing with impact health sharing here that actually reprices bills and matches you with members, and those bills get paid directly to the provider.
Yeah, it's actually pretty cool because I also am a client of Jenny's, and like every now and then I'll be in my back office and traditional health sharing really came through like religious or Christian organizations, just FYI, even like Mormon organizations that Mormon churches that would get together and help share the cost of everyone's bill. But it is kind of cool because it's like you're sharing for Steve. I don't know. Steve's a random guy. However, this is what's going on, and let's give Steve some encouragement and some prayers. Click here to send him a little note or something like that. So very different. I never got that when I was with Kaiser or any of the other major medical plans that I've been a part of over the years. So I think it's really encouraging that there's some different principles and values out there. Now, we talked a little bit about the potential cost savings, but what is there anything else in the cost savings that's compared to traditional health insurance that might be a little bit different?
Absolutely. There are many things that are different. So, with impact health sharing, which is what we're talking about specifically here today, we have several programs that are available for families to save. The very first one that I would really love to touch base on rolled out on October 1st, and it's a holistic approach to healthcare. A lot of people these days, families, individuals, and medical providers are seeking alternative ways to keep ourselves healthy, right? And so, if you have a family deductible or what we call a PRA here, which stands for primary responsibility amount, let's just say it's 2,500 for your whole household. Anything that you're paying outside of traditional healthcare, so things like essential oils, like I personally have subscriptions to vitamins and gym memberships, IV drip bags. I mean, you name it. Anything that you're doing to keep yourself healthy, you get to apply $100 a month towards your healthcare costs. So that it helps your family to pay down your household deductible simply by taking those monies and applying them to your healthcare deductible. So your family's deductible out of pocket is reduced by you being responsible and taking care of your health. That is the major difference. You do not get that in traditional insurance.
So if somebody's already a member, can they go ahead and get that benefit added if they came on board before October 1st?
It's open to all Impact members.
So like my concierge doctor, who I have to pay
Absolutely.
separate for, right, out of my HSA account.
Absolutely.
Awesome. Go ahead,
Yeah.
Allie.
Yeah, I think more people are going that holistic route. I mean, I know myself, I've definitely gone through different types of testing, and Hawley has as well. And so I think that's an important piece for people to get on board and really have access or encourage people to start using other methods, because the general public is seeing the value of it. So it's really cool to see organizations see that value as well. Ginny, I'm interested to hear how health sharing handles everything from like small doctor visits to major medical expenses like surgeries and hospitalizations. Can you talk about, I guess, first start with the easier, just doctor visits maybe, and then we can go into major medical expenses?
Absolutely. So really there's not much difference, right? This is comprehensive medical. And so it covers anything from a band-aid to something as major as cancer. Okay. So as a cancer survivor, to me, that was super important, right? To join a healthcare sharing community and know that I'd be taken care of should something happen again. So if you have an appointment, like annual visits. So with Impact Health Sharing, you get one free annual visit per family member on the plan. So there's no copay and there's no out of pocket to your family for that annual wellness visit. You can get a baseline of your health and up to $150 in lab work that is covered by the community. Now, in addition to that, Impact recently rolled out a concierge service. So when you are ready to make that appointment, you can provide Impact with the doctor's name, the hospital phone number. They will call and make the appointment for you and pay for that visit in advance. So there's no question as to whether it's accepted or not accepted. We do have an open network here. Now, to answer your question, Allie, about major events, right? And so you can walk into any emergency room, urgent care. You don't have to go, oh my gosh, are they in network or out of network? You can go wherever you would like to go. So if you have an emergency situation, you can walk in with your Impact Health Sharing card. We have an EDI payer ID on the back of the card, classified as commercial insurance, the same as all the big carriers. They can call the phone number on the back and get you admitted right away. Now, if you have some major illness, like all of a sudden you're diagnosed with cancer or you need to have a major surgery, they just call the phone number on the back and you become pre-eligible for those services.
Awesome. Well, I used to be a person who used Impact, and so what you're talking about is really interesting to me, because my issue with Impact, and sorry, I'm going to play devil's advocate a little bit, but I'm sure you're going to. I mean, you've already had now a rebuttal to it. My biggest issue was when I went to go see my primary and have my physical. I paid out of pocket up front, and then Impact reimbursed me, and the reimbursement process took forever because my doctor's billing department couldn't get the right forms to Impact. And so it was like a 6-month process to be reimbursed $300. And so also thinking about family planning and things like that, it made us nervous of just, okay, what if we have to pay an upfront cost for that kind of thing? Like, what does that look like down the road? And so Impact at the time didn't have a concierge to pre-book appointments or to prepay for those kinds of appointments. So that's a huge change that they've made since I've left, as well as the holistic piece was added recently. And so we recently left in June, I believe. So I'm glad to hear that they're evolving as needs evolve as well, because I know that was something that frustrated us. And so then even thinking about major medical expenses, we're like, man, it was so difficult to get money back for $300. What would it look like to get money back in case of an emergency, something happened?
I appreciate where you're coming from, and I really respect that you're willing and open to share that with me for sure. You're not alone out there. So the good news is Impact is new, and we're crusaders out at the forefront, changing the way people get healthcare. The bad news is we're new, right? And so there are growing pains, such as what you've experienced. The great news is it's people like you, Allie, who've advocated that have allowed for these changes to come about. Impact really listens to their members and takes your feedback from those types of situations and has done lots of things to correct that. You know, it's been 4 years since Impact started, and so relatively new. But just so you know, that the health and viability of a healthcare sharing company is usually around 3 months of reserves, right? But Impact has almost 12 months of reserves. And so rest assured, people's bills will get paid. Rest assured, they listen to people like yourself and have now rolled out the concierge. But wait, there's more. Dental and vision just rolled out
Yeah, I saw that.
last month as well. So
Wow.
there's no additional cost to have access to dental providers that are pre-vetted, vision providers that are pre-vetted. And here's the other thing. Recently, Impact put in place a group of people that have been hired to literally reach out. That's their only job, is to reach out to networks, to providers, and get them contracted, if you will, with them, so that things are in place so that you don't have to experience what you experience. There is a stigma, if you will, out in the world about healthcare sharing. Oh, they don't pay their bills, or they run out of money, and things like that. And we're having to combat that, right? Because Impact's not profit as a not-for-profit model. They're not about taking your money. They want to make sure that you get the care that you deserve. And so they listen to the members, like I said, and roll out these amazing programs to make things easier, and to work with providers to understand that we're different than a traditional healthcare sharing company.
What's so interesting, because I've been listening to this book called Good Energy by Casey Means. And, a lot of the medical information out there is very, and she's a graduate from Stanford Medical. Okay. So she has a lot of experience and she knows what she's talking about. Right. But some of the stuff that she talks about in that book is that, you know, doctors in their own right, like that do surgery and stuff like that, during their residency program, they are not getting the best nutrition, because the cafeteria food at hospitals isn't high nutrition. They don't get much sleep. So, it's like these emergency rooms that we do go into, we want to make sure that, we can have this preventative stuff available that it sounds like now Impact is having available, so we don't have to encounter these situations where it is an emergency. So, I know another question that people have about health sharing, since, in the past it was tied to ministries and principles that guide those ministries. But it sounds like with that law changing a few years ago, 5 years ago, that that's not the case anymore. You don't have to be part of a ministry to join a health sharing plan now. Is that correct?
You don't have to be a part of a religious belief.
Right.
So we're ethic based with Impact Health Sharing, and so we accept all religions, all faith, all creeds, and things like that. Now, it is founded and based in a love thy neighbor approach, which really, begins in Christianity.
Right.
And love thy neighbor, do unto others as you'd have done unto you. And we want our members to be responsible members of the community, because if you're irresponsible, the community doesn't want to pay for those types of things, right? And so, when you think about what's covered, what's not covered, it really comes down to, there are guidelines that every member is afforded a copy of, that shows you what is eligible for the community to share in and what's not eligible for the community to share in. And so I agree with you, though. Not all doctors are created equal, and just to, coming from my own space, I was one of those people, just going back to a little bit about who I am. 10 years ago, I was a person that was on a hope and pray plan, hoping nothing would happen and praying that it never did. And I was relatively healthy, found myself with a stage 3 breast cancer diagnosis and no health care.
Yeah.
Why? You know, the Affordable Care Act came out, wasn't always affordable for everybody. Not
Right.
everybody got a subsidy. You know, I'm
Right.
blessed to those that did. But healthcare sharing really grew at that moment to become available to people such as myself, you know, and had I known about it back then, you know, I would have definitely joined, you know, going from $900 a month to 288 a month is a big difference.
Yeah.
You know, I could afford 288.
That's huge. And so has that so having your cancer diagnosis in the past, did that affect how much impact cost for you and your family?
Absolutely not. So it's not based off of any previous existing conditions or anything. It's literally based off the oldest person in the household. So I'm on an individual plan. I pay 288 a month and I'm 52 years old, just so you know. So there's about a 10-year span before a premium goes up. So it's not like your premium's going up every year. Like this year, open enrollment starts today, November 1st, right?
Okay.
And a lot of people are out shopping and looking and seeing what they can do to get health care. And they're sticker shock, you know, and some of those people that used to qualify for a subsidy no longer qualify for a subsidy, and they're looking at what's available to them. And so yeah, I mean it's broken for lack of better
Let
words.
you want to talk about sticker shock? We went from my husband and I were paying 440 a month at Impact, and then when he started working at his new job, I just went on as a spouse, and I cost like $900 a month.
That's the other thing. Not all employers offer plans for members of their family. A lot of times they'll cover their employee and not the members of their family. And so members of the family can come join Impact and the employee can have theirs subsidized by their employer. You know, I personally wouldn't want traditional insurance anymore. I've seen what's been happening out there. And I would much rather pay somebody's medical bill and help them and their family than to line a CEO's pocket who's in a cubicle somewhere denying or approving my claim. Because I've had that happen too with the company I like to call the Blues.
Yeah, I mean, I think it's really powerful too, especially for business owners, with female business owners, maybe single moms, whatever the case might be, to really understand your health options. Because, like for me, and we're going to have more guests on these topics coming up in this second season that we're in right now. But for me, what makes the most sense is for me to do the health sharing plan, to have a health savings account, and then I also have another account, an HMA account, which is a health matching account. And so, you know, I take the money that I don't spend on my health insurance and I put it into my tax deferred account, which is my health savings plan. And then I put another portion into my health matching plan. So then when there is something that impact may not cover upfront, I can pay out of those one of those two plans, and then I can get reimbursed when I get reimbursed. And so I think that it's just really important. So, what are some of the advice you would give to women, business owners, that are looking at some different strategies on how to save money in this area, how they can make it work for them? And also, like, is there any type of business plans available? Like, maybe they have a small business, they have 3 or 4 employees, they're not necessarily by law required to have health insurance yet with that number of people, but maybe they want to offer something like this. What do you have available for that?
That's also a really great question. And the good news is there's no minimum participation here. So for small businesses, I am a small business, right? We have less than 10 employees here. We were paying $500 a month for each employee, the company was, and now they're not. They don't need to, right? And so whether one person participates in the company or all of them, it does not matter. So business owners can have their own private portal where their employees can sign up for healthcare sharing with Impact, and it's one monthly payment. They can set it up with their payroll company where things are deducted out of their paycheck the same way it would be if you had a traditional sense of an insurance. And so no minimum participation. So I have a small client who has a juice bar, and she has one full-time employee that she offers healthcare to. The
Mm,
other employees are under the age of 26, still on their parents' policies, right? And so she offers impact to the one employee, and she subsidizes it. So she pays for part of it, and then the rest of it comes out of the employee's paycheck. It's deposited into that main account, and every month Impact withdraws the payment, and she stays covered. So that can happen with any business owner.
I like that because, these days, a lot of companies, like Allie was just mentioning with her husband's company, that the spouse in this situation, it would be a much lower cost for them to be on a plan like that, right? So I just think that it's really good, especially for business owners, moms to know. I mean, we have all this insurance on our kids, and I have a boy, and out of your five, I don't know how many of them are boys. However, like three boys, right? It's like you don't want to go to the emergency room with your kids, but guess what? Boys sometimes end up there. I have a niece that has three boys, and I swear within a month time, each one of them has been to the ER for something, fell down, something happened, this or that. So, you just want to make sure that you have those things covered. And it sounds like, with Impact Health Sharing, that would be, those types of things would be covered.
Yeah,
Allie,
absolutely.
what's your next question?
I have a question about the businesses since, a lot of business owners do listen to our podcast. So do the businesses have the option of, well, I guess this is a two-part question. So the cost of the employee, can it also cover the employee's family? Would it still be based off of the height or the oldest person in that person's household? That's, I guess, part one. So go ahead and answer that and then next one.
Absolutely. Absolutely. Impact is for the people, for sure. So it is still based off the oldest person in the household. And yes, the family members can be covered. And so it would just be a payroll deduction and or an individual plan if the employer didn't want to have a portal, but they just wanted to say, here, you can have healthcare sharing, they can connect it to somebody that can help them get signed up. Absolutely.
Okay. And then the second part to that would be to clarify the business can choose the amount that they subsidize or not subsidize, correct? It could be any. It could be like a
That is
25,
correct.
50%.
Yeah,
Cool.
absolutely.
And for while we're talking on this topic, what about the tax implications? Like if you don't have health insurance now, you get taxed. So this plan does meet that requirement, right? So you don't
Absolutely.
have to
So
pay any penalties because you have the coverage through this plan.
yeah, so there's mandated states across the United States. California, where I live, happens to be one where it's mandatory that you have health care of some shape or form. Healthcare sharing members are exempt from the mandate, regardless of what state you live in. So in California, we have a simple tax form that you file and you check box C and check here, and you say that you're a member of a healthcare sharing organization and you're exempt from the mandate and any sort of tax penalty.
That's great. And then another question that I had was the process. So you mentioned that some things, are going to be possibly out of pocket, and then how you submit those to get them reimbursed. What's the turnaround times? I know that you guys have been working really hard to get that process to be a lot quicker. So when you're submitting a claim and getting reimbursed, what does that process look like?
So currently, right now, because we do have an open network, you might encounter situations where your provider says, we don't work with healthcare sharing. You have to be a cash out of pay pocket customer. They'll give you a cash pay discount. And then in the back of the Impact portal, there is a provider form that you can fill out, submit, attach your receipt. Now, there's a couple of forms that are needed for them to know those billing codes. You can upload a super bill, you can upload a IBU 40 form or whatever this number is called. It's all in the guidelines there. It's essentially, they need to know the CPT codes, and that gets into a lot of semantics and stuff. But doctors and hospitals and insurance companies have all this internal language of these different codes. And so Impact just looks at those codes, and they look at those codes based off of the Medicare posted rates. And so they will negotiate on your behalf to reduce those bills ahead of time. And if you've overpaid, they actually will issue you a refund.
Oh, amazing. I can't wait for that. Um, I mean, this has been a very interesting experience because my family and I, we've been on health sharing for a long time. We were with another company before, and we didn't have, in the beginning, we had a great experience. And then as that company grew, I don't think they were as proactive, and maybe Impact learned some lessons from that company or whatnot. But I mean, I have had a much better experience this round. I think we've been on Impact now for, I think it's been a little over a year.
Yeah.
Would that be right, Jenny?
Yep. A little
Yeah,
over
about a
a
little
year.
over a year. So, so yeah, I'm excited. I'm excited about the wellness program that they're putting in place. The only last question that I have before we get to the lightning round is, what type of unexpected medical expenses, such as accidents or chronic illness, would Impact cover?
All of them. So
Okay.
it's catastrophic coverage, everything's going to be eligible, and it's all subject to your PRA. You have to meet that deductible, and it is subject to your co-share, which is a 90-10 co-share. So traditional insurance, it's 80-20 and 70-30 at a network. We don't have a network. It's all 90-10. So 90% of any of those bills that come in are covered by the community, 10% to you and your family, up to a maximum of $5,000. But once that is met, all bills subsequently that come in after that are covered at 100% cost if they're eligible for sharing. Now, when I say eligible for sharing, you have to look through the guidelines. When you said some things are covered, some things aren't covered, it is broad, but it is subject to PRA and deductible. And so, and a catastrophic thing is going to be covered, right?
Yeah.
No one's saying, no, you can't do that. A
Right.
major car accident is going to be covered. They're not going to say, no, you can't have that. Now, in a car accident, if there's negligence or something like that, you were drinking and driving, then of course you were irresponsible. That doesn't go to the community to share.
Right. Right. Yeah, absolutely. Allie, any other questions before we hit the lightning
Nope.
round?
I think we've covered everything and I'm ready for a lightning round.
All right, kick us off.
All right, Jenny. So we've got some questions for you, and as it suggests, it's a lightning round. So a couple like words or shortened answers for each of these questions. So the first one is cash or credit.
Cash.
All right, real estate or stocks.
Real estate.
If you won $1 million today, what would be the first thing you'd do with the money?
Pay off my revolving credit.
What is a fun impulse buy you've had recently?
A travel trailer that I'm remodeling.
Ooh, it sounds
Fun.
like my kind of impulse buy.
No kidding, Allie.
What's a money saving tip that you swear by?
Cook at home.
She's my kind of girl.
I know. Well, I'm just sitting back here going, okay, next.
What's your biggest financial fear?
I would say not having enough money to provide myself with sustenance.
Hmm. And last but not least, what is your biggest financial goal for the next year?
$10,000 passive income every single month into my family's bank account.
Nice. I love that.
I love that.
Well, I really appreciate all the nuggets that you dropped today, Jenny. Thank you so much for being a part of our show. Again, we have so many great episodes coming up this season. We are going to talk about some of these other alternative strategies that you can use in order to make your life easier and better as far as your health goes, as far as your wealth goes, and as far as retirement and all those other things go. We will be here every Wednesday for the next, 15, 16 weeks until you get tired of us for season 2. So thanks again for joining us. Allie, any last words?
Thank you, Jenny. And then where can people find you if they have more questions about health sharing or impact?
On my email or my phone number.
Okay, give us your phone number then.
All
Well,
right.
we'll put it in the. Do you want to put it in the description of the podcast?
We'll do that too, and we'll have her say it real quick before we sign off.
Okay, so area code 951-452-4143. Feel free to reach out anytime.
Awesome. So you've got her number now. Call her if you have any questions, and then we'll also put her email in the description of the podcast.
Have a great day, everyone.
Thank you.